Good afternoon, everybody, and a very warm welcome. Thank you for joining us this afternoon. I'm Catherine McGuinness. I'm the chair of the Policy and Resources Committee at the City of London Corporation, the governing body for the Square Mile, and I'm also deputy chair of City UK. I'm calling from my office, where I haven't yet got my lighting perfect, so if I look a little as if I'm speaking to you from the darkness, my apologies. I'm very pleased to be chairing this afternoon's session where we'll be focusing on the sustainable recovery. Over recent months, discussion's been dominated by that key question, how do we build back better? We've seen, and indeed welcomed, a determination from government, from business and customers alike to emerge from the pandemic more inclusive, more responsible and more sustainable. Today, we're going to delve into the role that financial and professional services have to play in driving green growth and achieving that sustainable recovery. And with COP26 just a few months away now, that discussion could not be more timely. We've got a great panel of experts to join us. We're joined by Steve Waygood. Steve is Chief Responsible Investments Officer at Aviva Investors, where he founded its global responsible investment team, as well as its Sustainable Finance Centre for Excellence. He's also co-founder of the corporate Human Rights Benchmark, the World Benchmarking Alliance, and the UN Sustainable Stock Exchange Initiative. And we're also joined by Ida Levine. Ida is board director and lead expert on policy and regulation at the Impact Investing Institute, as well as a member of the board of directors of the Investor Forum and the Financial Markets Law Committee. And finally, we're joined by Mark Lancelott, sustainable finance and circular economy expert from PA Consulting. PA Consulting is sponsoring today's event, so a warm thank you to them for that too. Mark is also an expert advisor to the UN Global Compact and a member of the UK Networks Advisory Group. So it's a really great panel. I think we're going to get a really great discussion going. And I hope that you, the audience, are going to be thinking of some questions to put in as well. Looking forward to opening up that discussion in a second. But before I move on to it, I just want everyone to be aware that there will be a poll question that will appear on your screen at some point during the session, asking you where you see your organisation making the most impact as we transition to a sustainable world. So we'll be looking forward to seeing your answers and sharing the results later on in the session. So let me move to the panel. Steve, may I come to you to start with and just ask you, in your experience, what role do investors and more broadly the financial and related professional services industry have to play in delivering on our universal carbon reduction ambitions? Can you talk to us a bit about that, please?
Catherine, thank you very much. And I should also say a very warm thank you to City UK for the invitation to be with you. It's an absolute honour and a pleasure to be on this panel. You mentioned COP26 in your kind introduction there. We've been aware that COP26 has been coming for a long time. We just haven't quite known when. It's moved a few times, particularly because of COVID. And it has created an astonishing alignment geopolitically that wasn't intended, but provides an opportunity. And the alignment is the G7, of course, hosted by the UK, Italy hosting the G20, the finance track in July, the heads of state in October, and then both Italy and the UK co-chairing COP in Glasgow. These conference of parties for the UN Framework Convention on Climate Change are always co-chaired, and it's Italy and the UK. Now, I think we should ask ourselves, humanity should ask itself, why has it taken something like COVID to create such a coincidence? Because you don't govern markets through convention or treaty at the UN. Wonderful as an organization though it is, full credit to everyone who works there for everything that they've done to try and harness markets. You use the international financial architecture. So to start with your question and then bridge back to that, I think what investors need to do is make net zero commitments, to use their capital allocation to reward those companies that are also making their own steps towards a transition, to use our voice as stewards of capital to encourage change, to hold those companies to account that are slow and to welcome the leaders. We should also, as a part of that, update our voting policy to make sure that we're rewarding companies, be it through the re-election of the boards or the approval of their pay structure, or indeed, ideally, the publication of a TCFD report, which is put to the vote. Everything I've said up to this point is principally about equities, but of course, as an investor, we also have other asset classes too, real assets, credits, and sovereign. And that brings me to be very clear about the fact that there are limits to the extent to which investors by themselves can deal, of course, with climate change. It is the world's biggest market failure. And as a market failure, the market currently isn't sufficiently well corrected by governments to ensure that the externalities are internalized, or to put it bluntly, that the polluter pays. And until the cost of capital is reflecting the cost of carbon sufficiently, investors will not power the transition first. We will follow market creators, governments. We will not shape the markets directly. But that brings me to an opportunity, which I think our sector is failing to deliver: macro stewardship. For a long time, as we'll all, I'm sure, confess, when we talk about stewardship, we mean stewarding the companies, be it at an AGM, be it one-to-one meetings, be it in private conversations. But I think we now need to be thinking of stewarding the system itself. And we all have a duty to maintain market integrity, as does the PRA. And market integrity isn't just about the ethics of, for example, not mis-selling and ensuring you're not front running and not insider trading. When the system integrity itself is being tested by issues like climate change and natural resource depletion, I think we should be now thinking of stewardship at the level of the system itself. And how can we support leaders like Mark Carney and others in making sure that we do harness markets to power a transition to net zero on or before 2050? Because it's only when you harness the international financial architecture that we will deliver net zero. And there's a number of ways you do that, Catherine. So I think what I'm saying is investors can do a great deal, but we cannot lead it all. But we can help those policymakers that wish to make big changes to the system do so, because the system itself was never designed with the climate crisis in mind.
Thank you very much. And thinking about that macro stewardship, what more can be done either by government or the private sector to create an environment that incentivises green or sustainable investment?
Thank you for the question. It does start with making sure that the externalities are internalised and that the prices are right in the system. So that's fiscal measures, no more subsidies for fossil fuel, I'm afraid. Tax now on carbon, we need to make sure that's material. That should provide a floor. We need an emissions trading scheme on top of that provides a material price that gets us to a cost of carbon per tonne that's about €100 soon. At the moment, we're trading at about half of that, but we need it to be double soon if we're to harness markets. That's one area, making sure that the prices are right. Secondly, as I alluded to, the international financial architecture is very badly understood. We need to collectively understand better how banking, insurance, and investment is governed and regulated, what the role of central banks is. We've seen Rishi Sunak write to Andrew Bailey to say the Monetary Policy Committee and Financial Policy Committee needs to have regard to Paris. That's wonderful. But we now need to do the same thing with the OECD, with the IMF, with the World Bank, with IOSCO, the International Organization for Security Commissioners, and with the entire system itself, the standard setters like IFRS and the International Accounting Standards Board. So in short, we need a vision for the entire international financial architecture, which was never designed with the climate crisis in mind, was all post the Second World War, and was originally intended to create greater economic interaction so that we never went to war again as a world. But now the way that we're actually generating economic growth, financed as it is through fossil fuel, is actually making it more, not less likely that we'll see a third world war. And I do mean that. I know it sounds hyperbolic, but by the end of the century, we're currently heading towards 3.5 degrees. And at that degree of change, 74% of the world's population no longer live where they do, because the midsummer air temperature will be too hot for their body to function. So this is business as usual. 3.5 degrees is the implied temperature change of the London Stock Exchange. We need to wake up, and we need to realize that we are currently financing possibly the destruction of civilization.
I knew this panel was going to be challenging and interesting, and Steve, you have set us off to a really challenging start to meet that challenge that you've just put to us. So, Ida, could I turn to you and ask you to what extent are international regulatory frameworks currently aligned in relation to sustainable finance?
Thanks very much, Catherine, and thanks to Citi UK for having me on the panel. And in answer to your question, the short answer is no, they're not aligned. And it's a very fragmented landscape, and there's much more that needs to be done so that there's a cohesive global regulatory framework for global financial services firms and consistent comparable ESG data. The EU has taken the lead, and the Commission's new sustainability reporting proposal, the Corporate Sustainability Reporting Directive, which will replace the non-financial reporting directive, and rules on financial firm disclosure and integration are in process. Most of the ESG regulation from the EU came into force after Brexit, so it hasn't come over in UK law. However, the UK government has announced it has equal ambitions. For the moment, the UK has focused on climate with rules on mandatory TCFD reporting for companies, pension funds, and financial firms. The US has lagged behind, but President Biden's administration, with Gary Gensler taking up the lead at the SEC, and the recent executive order, has signaled that it will require ESG disclosure in some shape or form. And Asia is also doing work in the area. But there's progress at an international level and a lot of activity at the moment, much more than any of us would have thought even 2 years ago. This is among central bank supervisors, market regulators, and standard setters. This includes global progress on consistent, comparable reporting, also supervisory convergence on climate risk management, and stress testing for financial institutions. The fundamental building block is TCFD. This was first launched by the FSB in 2017 to improve climate-related financial information. But it really has started a movement. In a very exciting development, the IFRS Foundation has announced plans for a new sustainability standards board supported by IOSCO. For the time being, the standards will focus on enterprise value and how environmental and social factors impact an enterprise and its value. But there's a new working group that will be looking at dynamic materiality and will have an eye on the second prong of the so-called double materiality standard, which is the impact of companies on the environment and society. So there's much more to come, but at the moment, we have a fragmented landscape.
Thank you. And any suggestions, Ida, for how we can ensure greater international cooperation in this area?
Well, I think the IFRS is off to the right start, and even the US is represented on its committees. So the US, of course, has GAAP rather than IFRS standards for the most part. But hopefully they will mirror the IFRS approach. I also think we can't forget we have global markets. And this whole issue of double materiality is treated differently in different jurisdictions. So the EU has put its chips in the basket of double materiality. In their new proposal, they've made it clear that's where they're going. IFRS is more of a focus on enterprise value. The US really hasn't said what they're doing yet. But We have a lot of companies that operate in many jurisdictions. We have dual listed companies. And at the end of the day, it will be suboptimal if we have more information on some companies and not others in the global landscape. I would also say one other thing, which is we have an opportunity to have really meaningful disclosure, which focuses on impact and outcomes and has metrics that will really provide meaningful information. And I think it's important that we go straight there and we don't focus on KPIs and metrics that are less helpful, like whether a company has a policy or not on diversity. We need that really rich impact, measurement, and disclosure.
Thank you. And I think there's a lot there that would be good to come back and explore in a minute. But I just want to turn to Mark, first of all, and ask you, Mark, do you think that businesses in the financial and related professional services industry are aware of the enormity of the challenge that we all face in addressing issues around sustainability? And do you think they appreciate the enormity of the challenge, but also what they need to do to influence a changing customer behaviour?
Thanks, Catherine, and thanks to City UK and the other panelists. So in the conversations I have with banks and insurers and asset managers, we now see sustainability is clearly on the agenda in a way that it wasn't a couple of years ago. It's no longer seen as an issue for CSR, but something that's core to how the business works, to risk and to regulatory compliance. And the discussions at the moment are dominated by climate risks. So we've talked about stress testing and TCFD, and that's critically important, but it's not the only aspect of sustainability to think about. And to your question, is the industry influencing customer behaviour yet? Not really, would be my view. So one of my colleagues and myself a couple of weeks ago, we was looking around the websites of the UK banks and what they're saying about sustainability. And there's lots of great stuff telling us about what they're doing, but very little about how they can help customers become more sustainable. So we're still in a place where banks and others are trying to get their houses in order and starting to think about how they can help. And if you think about, what are the things that you can address, do savers and pension owners know the impact they could have with their money? I don't really think so yet. So many of you will be aware of the Make My Money Matter campaign that Richard Curtis is fronting up, trying to get us to pivot where our savings and pensions are and the impact that could have. So there was some research a couple of months ago by Nordea, and they calculated that pivoting your pensions and savings could have a 27 times multiplier effect than becoming more sustainable through eating less meat, reducing flights and moving to electric vehicles and eco-house. So there's huge potential there. And whilst some of us in the sustainability community are aware of that, it's not really a mainstream concept that people have realised yet. And if we think about, another challenge in the UK, so think about housing stock. So around 17% of UK greenhouse gas emissions are from our housing stock. And the big problem is around retrofit of existing stock. So it's not about new build and eco houses. So I think until recently, all of the green mortgages on the market were focused on new build, and there's one or two now that are starting to enable this deep retrofit that will all have to go on that journey in the next 10 to 20 years. There are some examples when we look at electrification of vehicles. So I'm sure many of you have read about the NatWest and Octopus deal trying to enable businesses and make it easier for electrification. But that's one example. So, so my view is, there's much more that can be done here. So clearly the risk agenda is super important, but actually how can we help customers, whether they're individual savers or businesses who want to become sustainable, how can finance really enable them, make it affordable and move on that transition?
The statistic you gave us is absolutely staggering, that how an individual uses their savings and investments can have more of an impact than how they change their lifestyle and what they eat, what they drive, or how they, where they take their holidays. I think that's a really staggering thought, that how we use our savings could have such an impact. And in terms of where businesses should be focusing their efforts particularly, and how should they be seeking to engage with new opportunities, do you have any particular priorities you'd highlight?
I think the starting point is around customer insights, which sounds obvious, but it's really going deep to understand what customers need. And we all talk about ESG and sustainability as a single thing, and it's not. The 17 Sustainable Development Goals, and each one of those is this huge agenda. So I think there's a really interesting thought to look at sort of theming investments or products to tackle particular issues, whether that's a particular material issue in a sector, or in an individual context, something that might be important to me. So, I might care passionately about the climate, or actually I might be much more focused on nature and the impact of plastics. So, we started to see this emergence of some themed investments. So I know, for example, there's circular economy ETFs that you can get from BlackRock and BNP Paribas and a few others. But I think this idea of how you can tap into sort of personal values and relevance, or in a business context, look at particular issues. So how can I solve for addressing the plastics issues, or how can I look at saving wildlife? I know there was a wildlife bond recently that got published. So for me, it's that kind of insight into the key issues. And the last thing I'll say is, this is talking about the opportunity, and I genuinely believe there's a huge opportunity both for business and finance. So how can you drive growth through addressing sustainability and having positive impact? I believe that's real. It's not easy, it's hard, but if you can work out a way of doing it, it creates real competitive advantage. And the last thought I would say is some of the underpinning capabilities you need to both address the risk challenge as well as this offering solutions to products and customers. There's some shared underlying capabilities around data and process and systems and skills and knowledge. And there's a real opportunity, if you're forward thinking, to address those things together and solve for both at the same time rather than just focusing on one.
Thank you very much for that. And I'm just going to remind people that we need you to be filling in that poll because I'm looking forward to seeing the results in a few minutes. And also encourage you to put any questions that you have, to put forward any questions that you have. I'm going to go around my panel. Does anybody want to come back on any of the remarks that they've heard from anyone else? Steve, have you heard anything from the other speakers that reassures you about World War III or not yet?
Really a laughing matter, is it? But so we haven't really addressed, I think, the stark reality of the science. I think we need to be really, for those people who might be watching who haven't quite read as much as perhaps Ida, Mark, myself, or you, Catherine, it's worth just pointing out that we are heading towards 3.5 degrees, even though the Paris Agreement says 1.5. It's worth also highlighting that since the Industrial Revolution, we're just over 1 degree warmer already. And that is fossil fuel caused, if you like. It's the way we've grown our global economy, which has done all sorts of amazingly wonderful things to life expectancy and poverty alleviation, but has caused this climate crisis. And it's worth just highlighting that even at 1.5 degrees, 90% of the world's reefs are gone. At 3 degrees, we've got rainforest dieback, so the world's lungs are going. And at 3.5 degrees where we're heading, as I said, 74% of the world's population, it's worth saying again, 74% of the world's population would have to migrate or have air conditioning or some other way of cooling their body in the summer in midday, or their body would shut down. This is the end of the century. This is the prediction where science is telling us we're heading, which is why it's such an urgent crisis that we move that trajectory, which is business as usual, towards something that complies with Paris. It's not too late. We do have, it is said, between 5 and 10 years. We need to all make our money matter. I love what Mark said earlier about making money matter. We've seen a revolution in the last 10 years in the institutional investment space, and increasingly now in wholesale, where individuals of high net worth are inheriting money and want to make sure it's invested in a way that has high impact. Ida can talk about that much more compellingly than I can. But what I think we need is to enable the end investor, the end bankers, the end insurer to understand how their money is used, as Mark said, for them to be able to see not just where their money is being invested, but also how their voice is used. The original creation of the stock exchange was intended that the owners of companies were the primary regulators because we would know what we owned. That's why the individual investor has a vote at the AGM. But I've got to be really honest with you, Catherine. In the last 10 years, we've voted about 500,000 resolutions on behalf of 33 million people. And there's only a few dozen of them that ever really ask on an annual basis, how's their vote been used? This is not a shareholder democracy. This is not a shareholder democracy. There is an abyss of financial literacy, and almost nobody within our 33 million customer base has any idea how a pension is properly deployed. Now, there are a series of issues here, but none more important than redeploying capital, than ensuring we are collectively stewarding the planet and its resources, and ensuring that we can maintain economic growth. And for that, we need to now accept that the science and the economics are clear. The politics is increasingly clear, particularly post the US election towards the end of last year. We now have a space. The US is so influential in every international body. So the Biden election doesn't just change the US, it changes the international financial architecture. We now need to reposition it so that it can steward the global resource. And not just think about what we do as individuals, not just think about what we as companies do or what our financial institutions do or our governments, but everyone needs to do everything they can now to harness the 400 trillion that sits in the global capital system and ensure it's financing the future we all wish to see, rather than the civilization that we're all going to miss deeply.
We see it, of course, through the press, but I was on a series of calls with City UK in Washington, DC, just a couple of weeks ago, and it was great to get that real sense of momentum, the US back on the stage at this really critical moment, exercising its really important voice and pulling people together and shaping the way. So I think we will probably have high hopes around what they might achieve working in partnership with others. I do not because you have an American accent, but I wonder if I might just turn to you for a second and ask you a little bit more about that question of impact, not only how we measure impact, but how we get across to our investors and others the impact that their money can be having. Some of the issues that Steve has just touched on.
Policy needs to merge into regulation. I think we've seen that to some extent, particularly in Europe and here in the UK, where it's very clear that regulation does not reflect the traditional market safety and soundness type goals, but there really is an impetus to tackle climate change. And I think we should just recognize that this is an extraordinary situation and we need to go a bit further than we might otherwise. As Steve said, this is really an emergency. So that's why I think having double materiality disclosure is so important, so that investors can see what companies are creating, what impacts they have. And also, as I said previously, it's really important that the quality of the disclosure is good and that it's about measuring impact, not meaningless KPIs, which I've seen, not mentioning any particular level 2 from the EU, but I have seen some just where just having a policy is considered to be something that creates impact. I don't think it does. It's a much deeper thing. And I think that investors really need to understand how companies are, as I said, impacting the environment and society, and for there to be granular and really measured disclosure that is useful. Having said all that, green policy can influence financial regulation only so much. And I think there probably will have to be other measures taken outside of financial regulation. But we can do as much as we can to keep the world aware of what's going on, what impacts there are, and to move the needle more towards seeing investors really take this into account when they deploy their capital.
Thank you. And Mark, any thoughts from you before we move on to another question?
Yeah, absolutely. So clearly the role of KPIs and measurement is super, super important to enable all these things that Steve and Ida have talked about. But it's not just about that. So I think there's a real opportunity and both a challenge in how to kind of connect this issue to individuals and what's important to them. So I can always go back to single-use plastics issue, which really caught people's imaginations from a 12-minute slot on Blue Planet 2, and we saw these highly emotive pictures of turtles trapped in plastic bags, and that really catalyzed a lot of feeling and action that's been reflected in that sector to address that. And I suppose the point here is, we like to think about kind of incremental approaches, and that's how we're wired to think, but that's not really how the world works. So a lot of the challenges we've got at the moment are these exponential drivers and challenges. But my view is what will happen is these discontinuities where something will happen and that will capture imagination and energize and catalyze action. And I think when that happens, companies who are forward-leaning on these issues are going to be the ones who will attract business and be successful, and those that aren't will really struggle to kind of catch up and feel the pain from doing it. So, in some ways that's a hope for me because things can change quickly, but also it's a challenge because, it hasn't happened, and what's the conditions going to be where something like that happens and moves us forward in the way that we want to get to.
Thank you very much. And we have a question for you. How do we best translate and include biodiversity goals, TNFD, etc.? Net zero is just one dimension. It's not enough. So how do we, what other goals should we be looking at? Anybody want to start with that? Anyone put their hand up for me, or I shall just come round in turn. Steve, thank you.
I've had the honour of serving on the task force for climate-related financial disclosure since its inception, and it's been a fascinating experience. I'm going to say a few things about it and then bridge to nature because it's much more complicated. Climate is already sufficiently complicated, but in 2015, when the TCFD was pulled together, we had the benefit of the World Resources Institute Greenhouse Gas Reporting Protocol. We had roughly 20 years of corporate practice in attempted disclosure. And we also had the Carbon Disclosure Project, brilliant as it is, CDP now as it's called. Now, with the TNFD, the Task Force on Nature-Related Financial Disclosure, it doesn't yet have the backing of the Financial Stability Board. And I'd say that was absolutely fundamentally critical to making sure TCFD got the traction that Ida referred to in her comments. It also, we need to understand that if you're measuring biodiversity, that's the genetic diversity of the ecosystem. And that's really hard to measure. It's even zoologists find it extremely difficult to measure fundamentally what that is in any region, let alone how a company is impacting upon it, let alone how an investor then impacts on a company upon that. So I think we need to be realistic about what we can achieve at the moment, given the state of disclosure and measurement. But there are huge opportunities as well. Principally, the opportunity is satellite remote monitoring data and bringing that together with the planning system. At the moment, we have a binary planning system, which is something allowed to go ahead or not based on one environmental impact analysis, no feedback loop, no monitoring on an ongoing basis to see whether it was correct. And I think that's a planning system that was built in the 70s. We need to really recognize that the satellite data now enables us to, at a very local level, start to at least see, if not measure the genetic diversity, see how nature has fallen away from particular regions, start to have proxies for what that impact looks like. But we need to, first of all, accept that the lack of the FSB owning this matters because it's not yet seen sufficiently in large enough numbers as a financial stability problem, even though it is. Certainly is. It's not, climate change is definitely the biggest and it affects nature too. We then need to have a look at the satellite data, but we can learn from TCFD and ensure that companies are encouraged to govern it, set some kind of strategy, have some kind of risk framework, and then some kind of measure. I don't know if Ida agrees, but the original incarnation of the European Commission's Sustainable Finance Disclosure Regulation, the suggested impact measures on biodiversity were written, I think, by somebody who had never read a corporate report on biodiversity ever. They were not disclosed by any company's report that I've ever read. It was more what they would wish to see if they could wave a magic wand rather than what was real and what could be done. So I think we need to accept that question is really hard and, of course, incredibly important given the Anthropocene that we're currently living through.
Thank you. Ida, do you want to come in on this?
Yeah, I really resonate with what Steve says. And we do need to get people drafting that detailed regulation who really understand what's going on. It can get tedious and boring, but we've got to make sure that investors have what they need to invest rather than having measures that just aren't meaningful. So I really think you're onto something, and I hope that in drafting these disclosure rules that are really at the coalface and really are digging into true measurement of impacts, we get people involved who are on the investment side and know what they're looking for.
Thank you. And while you've got the mic, as it were, Ida, we have another question. Measuring impact, when are we likely to have a uniform taxonomy that allows us to compare different companies' impacts? A sort of length of string question, I think.
Wow. So a global one, maybe never, because I'm not sure whether the US will stretch that far to have a taxonomy. Maybe they will. President Biden and his administration are really, I think, very committed to what they're doing on this topic. There are other people in the US, though, and there are other voices in the Congress. I think in Europe, there's a lot of work being done on not only climate, where we've got climate adaptation and mitigation already covered, and more work being done on the environmental side, and a group set up to look at the social side. We have a group here in the UK that is looking at the green taxonomy, and hopefully there will be some consistency between the UK approach and the European approach. But our industry is global, and we do need consistent, comparable disclosure against something that is global. And whether we're going to be able to get all the jurisdictions to agree on a taxonomy rather than more principle-based disclosure standards, I'm not sure. But it is certainly something we should aspire to. And when we get there, we should make sure that all the measurement is guided by rules that have the input of investors and people who really know what they're doing.
If ever there were a time when we all need to be pulling together and shaping that, the sector and the regulators and so on, it's now with this challenge. Mark, any comments from you on?
Just 2 quick points on the nature points. So the previous point Steve talked about. So for me, we need to be clear that climate and nature aren't separate things. There's a huge amount of interdependency around them. If we can't solve the climate crisis without addressing nature and its role, natural capital and soil and forests and how they enable that. So that's a key thing. Let's not treat these things as completely separate. And then the other point, just to build on what I was saying before, and this, how do we connect with individuals and catalyze action? And actually, when we start to think about impact on physical places or on wildlife, these things, we're wired to connect to that. It's more meaningful to us than thinking about the level of carbon dioxide in the atmosphere. Rationally, I know it's important, but it's harder for me to kind of emotionally connect with that. So I think that there's something there around how do we engage and energize and catalyze and create action around it.
Great, thank you very much. We're running rapidly out of time. Can we have a look, please, at the results of the poll? And can I just remind people that the question was, where do you see your organisation making the most impact as we transition to a sustainable world? I believe we can put up the results. Yes, we've got the results up. But unfortunately, I can't read them. Excellent. So, any surprises there to any of the panel? Any surprises in the results that we've just seen? Well, we're all, I think, I'll tell you
that's the biggest surprise for me, that I can't read it.
I'll tell you what comes up top. Collaborating and partnering with other organisations to help your customers become more sustainable. It's the outright favourite, I think, of all the answers there. And I think that's a really, actually, important point. Now, we have just a few minutes left, and I just want to ask each of you, without warning, what should we be aspiring for from COP26 this year? What would you really like to see come out of COP26? Who would like to start with that? Steve.
Catherine, thank you. I'd like to see coming out of the G20 the month before, in the communique, a commitment to review the entire international financial architecture so that it is fit for managing the climate crisis and can ensure that we do harness markets to delivering a smooth and just transition before 2050. Now, I believe the OECD, given that it was originally developed to reconstruct Europe after the Second World War, I believe they are incredibly well placed to lead and that review and collaborate, just as your audience suggested, with the entire international financial architecture. Now, that's a G20 outcome, not a COP26 outcome. What I'd love to see at COP26, carbon markets. At the moment, Article 6 has not yet been properly addressed. And also when I look at the Article 2.1c of the Paris Agreement, harnessing financial markets to delivering Article 2.1a, which is the 1.5 degree commitment, we still don't have, I think, a vision, a set of plans, or a process that bring markets together, finance together. The UN is a brilliant organization for convening and for developing market norms, but it is not how you regulate finance. It's not got standing there. So we need to bridge from Paris to each finance ministry.
Thank you. Ida, 1 minute from you.
Well, I would agree with that. I think it's a massive opportunity to bring everybody together and to get this cohesion we really need globally because of these are global financial markets, and there needs to be at least some common denominator where we're able to get the information we need, and there is some impetus towards really addressing climate change in investing, at least. I think that the voluntary carbon markets is another interesting area. And Mark Carney has done some work on structuring a voluntary carbons market. And it's really important that the market is linked to impacts, but it really hasn't been explored how you can, for instance, use carbon credits to finance projects that would be difficult to finance otherwise. So I think a very cohesive approach may get us further along the path to addressing what is, as Steve said at the beginning, really an emergency.
Thank you. And Mark, I'm afraid gone down to 30 seconds now.
Yeah, it's a very, very quick thought for me. So it's about time horizons. So, I know we talk about 2050 and 2040, but, we have to bring that back to now and talk about commitments and actions in current business planning cycles. So what do we have to do by 2025 that's going to drive action? Because otherwise it's not on the table when we're doing strategy and planning decisions, really, because it's just too far out. So that would be my plea.
Brilliant. And you managed the 30 seconds. You've been a fantastic panel. We could carry on for another half hour or more, but time is rapidly evaporating. And Steve has really underlined for us the existential challenge that we face. We know that this industry, in its broadest sense, has the potential to make a real difference. It has to be part of the answer. We've heard about the fragmentation of our current regulatory regimes and the need to pull those together with more coherence. And we've also heard of the importance of collaboration in this space. So I think that's really been a very thoughtful contribution. I'm very grateful to all of you, very grateful to City UK for inviting us all to participate. And I hope that Miles Seddick, CEO of City UK, is now waiting in the wings to take over to draw the conference to a close. Thank you very much, everybody. Miles, over to you, I hope.
This marks the end of the City UK's annual conference 2021. Thank you for joining over the course of the day for what has been a series of really insightful speeches and discussions, focusing on the role of financial and related professional services in creating opportunities for future growth, driving the sustainable recovery, and enabling digitisation and innovation in our economy. I'd like to offer special thanks to our conference partner, Citadel Securities, and our gold partners, Phoenix Group and PA Consulting, for their support in making this event possible. Across the day, we've had a really strong sense of the leadership from our industry in driving green growth and sustainable transformation, its ability to harness technology and innovation to deliver better outcomes and greater value for customers, and its role in supporting wider economic recovery post-pandemic and shaping opportunities for future growth. I'd also like to thank our lineup of fantastic speakers, all of whom have provided superb forward-looking perspectives. Please do note that all of the sessions have been recorded and they'll all be made available to watch or to share on our YouTube channel in the coming days. Thank you again for joining us, and we look forward to working with you over the coming months. Thanks very much.